Okay, so now we know that the market should move in three higher highs, lower lows, or waves, whatever we call them, right? And we know that it can, even though we identify this one as a high, it's a small, tiny one. What you should pay attention to is that the third wave always must break something. So if you see what wave 1, 2, 3 here, it's not valid three-wave structure. It needs to break the last high or the last low. See how the market break things, and therefore we can count waves. Wave 1 and 2 can be inside our previous structure or no man's land, but the third must always break something, right? See here, we have a low here. There, first wave, it actually broke it, so that's qualified already. We don't need to pay much attention to it. But why is this important to understand? Well, see this one here? Let us add the half trend. This would be identified as a half trend engulf, right? And you would lose that one because you don't know about the waves. You started here, right? You know that your wave 3 must be higher than this. What is this? It's market going up, breaks with a half trend engulf, but you haven't broken anything. This is a trade you don't need to take, simply because you are educated in how to see this. This will be your first high, second, third, right? So you should only be buying here if you would do anything, and at least until you break this one. You have 3 waves down. Now you should buy 3 waves up, 3 waves down, 3 waves up, 3 waves down. It may look very simple, but it's not easy to do when you're doing this live. But the more you practice and the better you become, the easier it becomes for you to see this. Now, what we're going to do now, we need to understand this. We have the 3-wave thing, or even here is actually this do a low and then a high. That means you need to recount at 3 because you must go from a peak. This was a peak, 1 down, 1 up. There's a new peak, 1, 2, 3. That's why it can sometimes be very hard to identify. But the 3 down is easy to spot when they come after each other like this. When it do like 1, 2 up, then like an A, B, C 50% before it goes up. Also 1, 2, 3 down. That's the 1, 2, 1 down, and 1 up, right? You have 3 in a row. You have the 1, 2, 1 down, 1 up. That is also 3 up in total. This is when market is in trend. It's pretty easy to spot them. But sometimes things happen that just doesn't make sense. It's when the market are doing another reversal that we called Quasimodo block. The Quasimodo, basically, if you had heard about Head and Shoulder, you know it looks like pretty much like this. This, right? Here's the neckline, here's the left tip, here's the right tip. That's the Head and Shoulder, here's the head. Very common pattern. Many people trade it. Depends on where you take it, of course. It may work, but it's not super solid pattern. Then we have the second part of the Head and Shoulder, which looks like this. When this second leg from this head here, when this second leg takes out this neckline, clearly takes it out like this. This is called a Quasimodo, the hunchback Quasimodo. His back is like broken, right? That's the difference between head and shoulder and a Quasimodo, right? Now, there are things that you should know about the Quasimodo. If they happen at the daily, weekly high levels, it's normally very good as it is. But what we use, or I use at least, is something called Quasimodo block. It looks like this. Market comes down like this. You may be focused on your wave counting here, right? And you see wave 1, wave 2, and wave 3. Great. Now you're looking for reversal here. You got your golden wick. Great. And then this happens. And for a trained eye, we would see this. See this. This is a Quasimodo reversal. What makes this Quasimodo very good is when the Quasimodo, the second break of the neckline, happens as a block of same candles. Must start below this one, like this. That Quasimodo, for a well-trained trader and a trained eye, know that if this is happening, when market come back next time where this block started here, it's a high probability entry. And you can of course measure this one as well. Say, okay, if this is close to the 50%, or I have different numbers here, but 50% there, at 50%, you didn't have reached the start of it yet. So you expected it to go lower like this. And this is a Quasimodo block entry on gold. You could just use the ABC, of course. But the Quasimodo should look like this. It should have a left tip. Go down, make a head. And the head should always have a free candle below the left tip. Meaning if you draw a line here, you should see a free candle below here. Otherwise, it's not a confirmed head yet. It may just be consolidation. Why we do that, right? And then when this block happens, you know that this area is super probability setup for you when it comes down here. It doesn't mean it should hold, but if you come down to this level, if you enter here and your stop is below here, your risk is small and your gain is massive. Can you see it happens anywhere else on this chart? This big Quasimodo here also had a small Quasimodo on its actual right tip. See it? If you were entering here, say this one here. This is what spatial intelligence is. You can see charts up and downs, and you can see patterns as it happens because you have trained your eye for it. See how this is left tip, this is head. See how this tiny body, only the body needs to be below than this one. It's qualified its head. Now it started a block, but it couldn't hold. Pull back. This was the false half trend engulf. How it now block away takes out this neckline. Where should it go back to? Where this block started. Where did it went? Where this block started. What you got here? Half trend engulf. You can confirm it, or you can enter here with stop below these wicks. Right? And if you get stopped out, enter again when you got a confirmation pattern for it. You see how these two, left tip, head, block away, come back to the start of it. left tip, head, blocks away, come back to start of it. So when you do not have your 1, 2, 3 waves, you may have your Quasimodo going on. And that's why you need to have both goggles on you. Is this a Quasimodo? Is this a waving market? Is this a consolidation market? And so on. Experience is the thing that you need to build up. But by identifying every structure of the market, and by knowing this, you will become a high-performance gold trader. Ignoring this, trying to find a simple 5-minute, 1-minute setup for gold every day and so on, chances for you to be successful there is small. Go back to the core principles of trading, and you will become a very good trader if you put in the effort into this. That's how it's done. Right? So the Quasimodo block needs to block out, not just more. It can be red, green, red, green, red, green, and breaks it. They may work, but they are not as reliable as the block Quasimodos when they are clean string of same candles on the 4-hour, like this, taking out the neckline, coming back where it started. Did it once, did it twice. See here, this is not a clean block. There's a mess around here. Not reliable. What happens? Didn't hold, right? Because there was something else going on. 3 waves up, hot trend engulf, down. I don't say this is easy. It's not. But if you at least understand what's going on and what you're doing on the higher time frames, 4-hour or higher, you have a much better chance to succeed in this business. And that's what you're looking for most likely.